Good morning, everyone. This is Brad Matheny. I wanted to take a quick minute to share with you my expectations over the next week to, let's say, 6 weeks plus. These are going to be my expectations regarding the S&P and gold related to my SPY cycle patterns and my general research. A lot of people have been paying attention to what I've been doing lately, and it's really exciting to see everyone start to really focus on what is going on and what I'm doing behind the scenes here. My focus is to research, deliver incredible tools to help you become better traders. Not only is my MENT rotational modeling system and other algos performing very well, but we've got some real exciting news regarding the SPY cycle patterns. Just last week, with honestly the help of the people that are following and commenting, I was able to identify a new pattern, a time shift pattern. I want to remind everyone to please visit MENT.com. The website is MENT.com. See what I do, see how I can help you, learn how my analysis can assist you in becoming a better trader, learn how my expert growth membership and research continues to provide great solutions for everyone. My goal is to continue to refine these services to provide even more data. I'm working on new algos. This is the expert growth membership page. Once you're in and you are a subscriber, you will have access to all of the research. You will have, again, through the custom indexes, you see here the MENT rotational modeling system is now 100% bullish. You can see the historical results here have been outstanding. We lost about 1% last year, nominal amount, while everyone else was losing 20 to 40% for the most part. We're up just a little bit in 2023. And all of the additional custom indexes, which are included in my research every week, I create all of these for you and provide very detailed definitions of what to expect going forward. In fact, let's get into that right now. So let me come back up here, remind you again to come to MENT.com, check out what I do, and check out how I can help you. But let's focus primarily on the SPY cycle patterns, and I have added this new column, which is the time shift pattern. It's built around rules. So this is a time shift pattern that occurred on a weekend. It is ignored. Time shift patterns that occur on either a Saturday or a Sunday will be ignored because they do not reflect an immediate shifting in cycle pattern data. A time shift pattern occurred here on the 6th. This is why it is green here. It shifted the cycle patterns upward by 1 day, which is what we saw last week. And we have no new cycle patterns going forward. So as of this weekend, right now, we are moving back into a normal cycle rotation. And as you can see, we have a number of patterns setting up. We have a gap potential, a gap reversal, rotation, top resistance, consolidation, inside breakaway, breakaway, carryover, crush, flat down day, pop, which is crush and pop, means they could be very large bars, then a blank bar, and then a base rally on the 23rd. So essentially over the next week, week and a half, up until approximately the 19th or 21st, we should see some moderate consolidation, sideways trending, possible downward trending. Then come the 19th, 20th, and 21st, we could see some really strong volatility. And then we will likely move into a trend near the 23rd of February that may continue to rally through the end of March, maybe into April 7th, 8th, 9th. I believe by the early April timeframe, we are going to move into a very strong consolidation, peaking pattern that will be very dangerous for traders. Now, let me come over here to the charts and try to show you. This is the SPY on a weekly basis, and what I've done is I've drawn these lines, these little green lines here. Let me zoom in here and try to show you what's happening. So this is my expectation of the markets over the next 4 or 5 months. So basically out here is July, August. Okay. This is the end of April peak, as I understand is going to happen. And I believe that's going to put us around the 435 to 440 area, maybe. Let's call that 425 to 435 area. My MENT rotational modeling system is 100% long. I expect some consolidation and downward trending over the next week. I expect the markets to resolve to the upside near the 23rd, 24th of February and continue to trend higher. This would be a wave C formation. You can see here the low. We have wave A, B, C, possibly D, and then eventual E, which may break above this trend line here. Now, we have very strong historical support going all the way back to 2010-11, which is this yellow dashed line here. During this contraction, we could see a deeper move, possibly down into this yellow line. But I believe that we are going to stay within this support channel, these dashed light yellow levels here, and I believe we're going to run into support right around the 404, 402 area, which is where this light cyan color, light blue line is. So essentially, we've got a period here of extreme rotation. We're going to move into an extended wave D here, which will then move into a larger move to the upside. Now, we will have to see how this plays out. If my analysis is correct, we have an A, B, C wave here. This could be a corrective wave, starting a new wave 3 here, which would eventually peak out somewhere up in the 505, 515 area, up over here, then contract again, and then extend up to a wave 5. Now, this could be just the beginning of a broader A, B, C, D, E, or A, B, C type of wave. We'll have to see how we go and see how it moves. But for right now, I want you to focus on the fact that between February 13th and February 23rd, expect a lot of nothing, a lot of sideways chop. Then around the 21st, 22nd, 23rd, we're going to be looking for a base bottom. This is of February. And then we will see a rally through March, ending likely near the end of March or somewhere around April 6th, 7th, 8th. That will be the peak right here. At that point, we're going to roll into downward trending, which will last again through May, June, and likely end around July 4th or 5th. Okay, there's going to be a period of basing and bottoming around July 4th or 5th, which will move us into the start of the third quarter, whereas I believe we'll start to see movement back to the upside. And this could coincide with potentially a Fed easing stance. We could see the Fed move interest rates down a bit or pause, which could prompt a very strong upward trend. Until then, we've got this big sideways rotation with some choppiness. Everybody's going to think this is a major crash. So be aware that you're going to hear a lot of news about everyone saying, oh, the markets are collapsing. I don't believe that's going to happen. I believe we're just coming right back down here to set up essentially a wave B bottom, or what could be a wave D bottom, setting up a third wave, or excuse me, a fifth wave up here that would end this A, B, C, D, E type of formation. Then we'll have some contraction. And that's likely going to happen around early 2024, January 2024. So this could continue to extend up into this area, slowly but surely, reaching an apex around here, and then rolling back down, which would potentially be wave B. Okay, so now pay attention to where we're at with this. I'm going to try to keep you informed and keep you aware of what's happening, but right now you need to be aware that we have about a 7% upside move in the SPY. Then we're likely to see about a 10 or 11% downside move to be able to retract back down into this area from about 435 down to about 400. That's about a 10% move, 11% move, before we're going to be basing in early July. And this is what you need to prepare for as traders. Now I'm going to come back over here and show you what's likely to happen in gold. This is again a weekly chart. Gold is likely to attempt to consolidate. We've seen this big rally here. We've seen it peak out up in this area. I'd been calling up in this area for some sort of a pullback. We extended higher. We pulled back. I think that the move in gold could stall through July. So notice where we're at here with July. I think everything could start to align with a potential Fed softening near July or August, and the gold could begin to move another wave higher to the upside in July. So be aware that we could be looking at very consolidated gold and very consolidated SPY activity, major market activity for the next 4.5 or 5 months. Everything looks to start getting very opportunistic around June, July, August. So be aware that gold will likely consolidate back into this 1875 area, maybe as low as 1820, 1830. But understand, this is perfect. This is exactly what we want. The bigger move in gold is not going to come until 2024, 2025. So be aware, just like I had indicated in my gold video on my YouTube channel, we're not going to see a huge appreciation until we move into 2024, 2025, and then it really starts to pick up. Okay, so now let's go back to the custom valuations index. The U.S. custom valuation index, we are not seeing any real upward trending, which means we're not going to see any real price appreciation in the market. And I believe that the markets still need to unwind. I believe we're in a period of transitioning after COVID. I believe that we have possibly another 6 or 7 months of unwinding before we're going to start to see some real price appreciation, possibly even leading into like an October, November, December type of a rally phase. So think of it as, here's our base. Possibly we're right at this early basing stage right here. We could be looking at 3, 4, 5 months of sideways trending, maybe a little blip upward in July, August, September. Then we could see a bit of a stall before we start to see real appreciation starting in January, February, March, possibly of 2024. So be aware that this could be a very dangerous 5 or 6 months of sideways trading if you're not prepared. This is not the time to go all in. This is not the time to be betting the farm on these big trends. This is the time to be playing the short-term trends, looking for short-term targets, maybe 3, 4, 5% targets. This is really the time to be positioning. My opinion is that July, August, September is going to be the best opportunity for you to reposition assets into what may be a solid melt up in the end of 2023, followed by a bit of rotation in early 2024. And then by maybe April, May, June of 2024, we could be looking at the second major opportunity for positioning for the next big wave higher. Now, the U.S. markets and the global markets are very likely targeting a 50% or near 50% retracement of this range. Now, I've tried to draw these lines to give you an idea. This could actually move a little bit lower, but this is pretty good. Long and short of it, this is where we're looking for the April highs, possibly right up in this area for the end of April peak in the market before we roll back down lower and try to establish support. So you can see the range we've had from 2022 all the way down in the U.S. market here in blue and global assets here in red. My opinion is we're very close to reaching a peak. I think we need to be aware of the fact that we have limited upside potential, which should end potentially in early or late March. So again, sometime between March 10th and March 25th or so, that should be the end of the upside rally, leading to a topping pattern which may be extended and have very limited upside move in most of April, and then eventually peaking around the 25th or so of April and rolling back to the downside. So understand that we have very limited upside movement right now. You've got to be cautious. We're not going to see huge downside moves, but we have very limited upside moves until the end of April. Then I think we start to see a really big downside trend, a pullback of maybe 10, 11%. Now, the custom fear index and the market sentiment index, I've tried to draw these lines, these blue lines. I think we're going to stay within this range throughout the next 5 or 6 months. I think we're going to see a moderate melt up through the end of February and all the way into mid-end of March. Like I told you, moving into sideways congestion in early April and then peaking after near or after April 25th. That means that we're likely to potentially get up into this 435, 440 area on the SPY and then roll back over and try to identify support. That would give us a very clear A, B, C pattern, which would lead to a potential D pattern, maybe setting up a wave B correction, maybe setting up a DE rally back up to here before the end of the year. We'll keep this updated for you, but long and short of it, I'm trying to give you some real clear indication. 5, 6 months out into the future is what I expect. Next, we're going to go to consumer engagement. And be aware here that without consumer engagement, we are not going to see any real price appreciation. We're not going to see any real strength in GDP. We may see some recovery in services sector. We may see some increased jobs data. But as long as consumers continue to flag out in this blue flagging formation, we are not going to see much in terms of real economic advancement. We will see a reflation cycle, which we've seen 2 right now, but I believe the reflation cycle is going to come to an end. So we may get up into this area where I'm pointing and then roll back down into this flagging formation. This flagging formation actually aligns very closely with July, August, September, meaning at this point we might start to see consumers really start to engage throughout summer and start to trend higher. But without consumer engagement, we are simply not going to see the economy begin to reflate. Now, what does this mean overall? Barring any catastrophe from the market, meaning global banking system or economic crisis, what we're doing is we are transitioning. And we need to be very aware of the timing of this transitioning phase. COVID, back over here, this is the COVID low right here, created this inflationary cycle trend, which caused this massive deflationary cycle trend in consumers, expecting a major crash as the Fed started raising rates in 2022, which has now led us into this reflation cycle, this basing, bottoming reflation cycle. And remember, we're back down into the 2012-13 area as far as consumer engagement. We've wiped out nearly 10 years of consumer engagement in the economy. The Fed will likely become very cautious over the next 5 or 6 months as economic data continues to play out. The strength of the U.S. economy is there, but the consumer is likely to continue to weaken. And another 5 or 6 months of weaker consumer engagement will likely cause the Fed to prompt a downward cycle related to rates. When I say a downward cycle, I'm not talking about a massive zero interest rate type of scenario again. I'm talking about rates dropping maybe 25 to 35%, maybe down into the 2.5, 2.75 to say 3.5 type rate. So again, just enough to take the momentum pressure away from the global markets. But that may come near the end of 2023 or in early 2024. We'll see how the markets react and see what the Fed does with regard to continued pricing pressure. We are seeing very strong commodity and valuation demand. So understand that we are seeing with this chart real valuation decline. We are seeing very strong valuation decline. As long as we stay consolidated down in this area, we will see commodities continue to deflate. We will see housing deflate. We will see consumer engagement deflate. We will see a lot of deflationary trends, which is exactly what the Fed wants. They do not want to push the boundary and cause some sort of a collapse, which is why I believe near the end of 2023 or early 2024, we may see the U.S. Fed start to weaken on rate increases, maybe even decrease rates by about 25 to 35%, maybe down into the 2.5, 2.75 to 3.5 range, slowly but surely as it tries to spark a little economic reflation. Okay, there's your update. So now where we're at with the SPY cycle patterns is that we have basically from the 13th, let's see, we're on the 12th right now, so we're going to start with the 13th, which is rotation, top resistance, consolidation, inside breakaway. This could all be relatively bearish in trend. We get to a breakaway, carryover, crush. This could all still be relatively bearish, although I would warn that we're going to be more sideways than bearish. We have a flat down, then a pop, and then a base rally. So this is really the first indication of upward trending. We do not have any, these are not bearish and bullish. These are the time cycles. This is saying no time shift. This is saying that we had a time shift in place starting on this day. So as we move into this warning period, we may see this roll into consolidation or bearish trending through here. And that's what I expect. In reality, I expect the SPY, which is currently trading, let's go take a look at the SPY. Currently trading at 408. I expect it to probably consolidate above 395 to 400, maybe 402. This is a weekly chart. So again, we come in here and take a look at this. I would expect the SPY to consolidate above this blue line, pulling back possibly to this blue line, which would be around 402. Staying above this channel, particularly staying above this yellow channel here, possibly consolidating down into this 399, 395 area. And of course, that would be until potentially February 23rd or so. Then we'll start to rally back up out of it, maybe get a pullback around mid-March, and then continue to rally up into the end of March, beginning of April, where I think we could see an extended top for about a month. For about 4 weeks, we could see an extended sideways topping formation up in this area before we get our breakdown. The big move will come after it breaks this level here. So essentially somewhere in May, likely around May 20th or so, we're going to get this little blip right here around 425, and then we'll start to break downward. And that's where we may come back down to this 395, 404 level by about July. Somewhere in late June, early July, this will be our bottom. Okay, guys, I hope you're following along. Remember, come to MENT.com. Support my research if you can. If I'm helping you make money and giving you good information, which I hope I am, come and support me. It's real simple. I want to just keep doing my research, helping you find better trades and stay aware of what's coming in the future. It can all be found right over here at MENT.com, and I really appreciate all of you for your comments and your research and your loyalty with regards to helping me. My goal is to continue to develop the best solutions for traders that I can using my predictive modeling and other research. All right, guys, that's it. Talk to you soon.